And talking about share market, Asian share markets mostly eased today morning after stunningly strong US jobs data. It soothed concerns about global economy, but also added to the risk of an aggressive tightening by Federal Reserve. Geopolitics also remained a worry as White House warned Russia could invade Ukraine any day, and French President Macron prepared for a trip to Moscow. The cautious mood saw MSCI's broadest index of Asia Pacific shares outside Japan down 0.1%. Japan's Nikkei, it was down 0.9%, South Korea 0.8%. Chinese market have returned from Lunar New Year break with the bounce back, with blue chip CS 1300 and Shanghai Composite both up 2% in morning trade. They caught up with last week's gains in world equities. Hang Seng, which returned from break on Friday, was flat. S&P 500 futures and Nasdaq futures both eased slightly after last week's market turmoil that saw Amazon gaining almost $200 billion, while Facebook owner Meta platform lost just as much. The January payrolls report showed that annual growth in average hourly earnings in US climbed to 5.7% from 4.9%, while payrolls for prior months were revised up to 700,000 to radically change trend in hiring. Consumer price figures for January are due this Thursday and could well show that core inflation in US has accelerated to the fastest pace since 1982 at 5.9%. In currency markets, euro continued to base out other currencies. European Central Bank and their meetings are going to be watched out. Dollar fared better on Japanese yen as market still sees little chance of Bank of Japan tightening this year. In crude, we can see it was still near 7-year high levels. It's amid concerns about supply given by frigid US weather and ongoing political turmoil among major world producers. Brent crude added another 32 cents to $92.97 a barrel, while US crude was up 42 cents to $91.89 a barrel. WION now available in your country. Download the app and get all the news on the move.